For traders and investors who have patience, are not leveraging themselves overly, and have, the willingness to stick to a strategy, we might be entering into a great time to make a lot of money in the financial markets. In today's video, I'm going to be discussing where we're at with the NASDAQ, the recent rip in gold, the dollar index, and so much more, as well as top setups that I'm watching myself. Let's jump into it. Now, first of all, why did I mention at the start of this video that this could be a really good period of time to make a lot of money? Well, it's because the VIX recently spiked dramatically. And this chart, which I keep talking about, is the fear index. It's what I like to call it, what a lot of people call it. The VIX is like a fear index. When people get really scared, there's a lot of opportunity out there in the financial markets. And it's possible that the more fear we get, the more money some of us could make in the long run. And the sum of us is going to people who are disciplined, willing to stick to their plan, and who admittedly have cash at the ready to deploy if the market goes lower. In today's video, I'm going to be discussing my current positions as well as things that I'm watching for in the event that we see volatility resurface in the financial markets and perhaps a drop in the stock market. Let's jump into that. So I'm personally already long the S&P 500. I bought it last week in all the craziness because, again, I like to buy the fear when people are really scared out there. That being said, sometimes buying the fear can lead to more fear causing you to lose money. But in my career, some of the best buys that I've had in the stock market are when people are really, really terrified of what could be coming next. And so people got really scared last week with the idea that, the Bank of Japan, there's going to be a huge carry trade unwind and the recession is imminent and we're going into it right now and the Fed needs to emergency rate cut. We saw just fear after fear come into the market last week. And what happened? Well, it led to a really nice buying the dip opportunity for me and traders inside of our Discord who caught the same trades. I went long on several things last week, and notably SMH, which is the semiconductor ETF. I bought this one last week. I bought SPX 500 or SPY, which is the trade that I took. And I bought IWM, which is the Russell 2000 index, which is not performing nearly as well. But my point is, last week we saw fear rush into the markets, and oftentimes this fear gets everybody on YouTube excited about, oh, we're going into a big bear market. But I've discussed this recently on how, if we do see a bigger bear market form, meaning the market sells off and tanks through the lows, it's going to be a wonderful buying opportunity in the long run, in my personal view. And I've talked a lot recently about my strategy in the event that we see a bear market, what I like to do. I like dollar cost average into stocks that I like, and in the long run, that can likely make a lot of money if you're buying good companies, if you're, doing it diligently and not managing your risk poorly. It could be a wonderful buying the dip opportunity. With markets being this volatile, I mentioned that this actually leads to, historically for me personally, some of my best P&L results ever in my personal trading. With that said, we are kicking off a 35% off discount on our Discord group. If you haven't already joined this, inside of the group, you get access to all of the trades that I'm sharing, every entry, every exit, stops, etc., on my positions with full breakdowns behind each and every trade. And this is what the group looks like. So you can see every trade that I'm taking is accompanied with a huge level of analysis and kind of in-depth breakdowns on why I'm taking each position, where I'm entering, where I'm exiting. I trade FX. We caught a big move on USD/CHF recently. I trade gold and silver and oil and all sorts of different things. So if you're not already inside of the group and you would like to be, this is your chance to currently get a huge discount on it. Now, how you can do so is clicking the first link in the description down below of this video, which will take you to a chat link directly with one of my team members here who can get you set up with that membership discount before the sale ends. Again, that's 35% off our membership inside of the group. It is a one-time fee to join, and any questions you may have can be answered by a rep on my team by clicking the first link in the description. Now back to the video. I'm going to talk a little bit about why I think gold could continue to move higher, as well as, stocks, etc. But gold has been killing it recently. And some of you guys might have noticed that, gold's up 1% on the day. And while the stock market is also up, the gold is actually outperforming it today. So let's discuss this kind of recent move higher in gold and my thoughts on it. So on the Edge Finder, gold is getting a +9, which is a very bullish reading overall. And I wanted to break that down a little bit. Why is it getting such a bullish reading on the Edge Finder recently. Now, one reason I do like gold to the upside is the really big exposure to the long side that institutional money has, according to the latest commitment of traders data. Now, if you don't have access to this report, the commitment of traders data basically shows you what institutional money, hedge funds, banks, what they're buying or selling on a week over week period. And we can break that down really quick because it is kind of telling here this week. You can see the Japanese yen, which was very, very short, has really come back in to a little bit more balance. We now see the ratio being 54% short to 46% long. And this is notable because, this carry trade unwind fear might be, keywords there, behind us if we continue to see economic data stabilize in the US, which is a big if this week. And we'll have to watch to see where that is. But we've seen a dramatic change in the Japanese yen. When we take a look at the week over week filing, you can see a really dramatic covering of short positions. I talked about that in my weekend video. NASDAQ also really interesting. We saw a lot of bullish shift here, closed a lot of short positions, institutional money did, and they opened a lot of long contracts. So very interesting. We also have that on the SPX, and we see gold getting a interesting one. Now, gold overall, again, I mentioned, is very bullish on the longer term kind of positioning, but in the latest weekly filing, you can see they closed a lot of long contracts and they also closed a lot of short contracts. So kind of a neutral reading there, but they closed more long contracts, but they have a lot more overall long contracts open. Now, learning how to read this might take a little bit of practice, but once you understand how to read the commitment of traders data, it can really show you on a week over week basis what institutional money, where money is flowing in or out of on a longer term basis. And us as traders can very much capitalize on what we see there. I use it all the time. So if you'd like access to this report, by the way, you can get a trial for 30 days down below in the description. Just look up the Edge Finder on our website, a1trading.com, and you can find out more information if you're interested. So with gold trying to take out the highs here, this is what I'm looking for a possible entry. And again, if I take this trade, it will be shared inside of our Discord. We're coming up to resistance here, right around the 2460 level is just about the all-time nominal high. Why do I say nominal? Well, because on an actual and adjusted for today's dollar basis, the all-time high for gold is actually around 3,200, I believe, in like the 1980s. So gold, in my view, has room to run. I've been bullish on gold pretty much all year long. And what I'm looking for on the daily chart is let's see a true break of the structure at the high point here. Let's see if we can get that. If we get closure above, then it's very possible that the momentum train continues. And I really like the idea of possibly buying a pullback. You might say, well, Nick, if you're going to buy it anyways, why don't you just buy it right now? Well, because I don't know if we're going to just reject off of these levels again, or if we're going to take them out. If we take them out, it's a very positive thing to myself and other bulls that, hey, look, sellers are beaten at this level. Let's get long. So I like that idea. The other alternative is that if we see rejection here and we do, move back lower, I watched for this level last week, did not get the entry, but looking for a possible pullback entry at this 2360 level. It's far away, but could possibly happen if we do see a rejection off of these, nominal all-time highs. And while we're on the topic of gold, which is up 1.15% here today, let's also discuss the dollar, which is actually flat on the day. And this has been a little bit confusing to some traders. They say, well, why isn't the dollar much lower today if gold is up? Remember that gold and the dollar, they have some correlation, but it's not perfect. It's not always one up, one down, inverse correlation. Their inverse correlation is not perfect. It's not always, one up, one down. Sometimes they can move flat or they can move both up at the same time. It really depends the context. And right now, the context for the dollar index is investors are trying to figure out, traders and market participants are wondering, is the Fed going to cut 50 basis points in September or 25? And if it's 25, the dollar index will probably stabilize. And if it's 50, the dollar index will likely come down. And we don't know what that number is. In fact, the latest FedWatch tool, let's take a look at that. So it seems like markets are pricing about a 50-50 chance of a rate cut of 50 basis points or 25 basis points as we get into September. It's crazy because, a lot of people were out there shouting that we're not going to see any rate cuts this year. And I've stubbornly stayed in the camp that we are going to see rate cuts this year. I've been right about that, but surprised by how much things have shifted. I was thinking earlier this year that we might get 2, maybe 3 rate cuts by the end of the year. Now it looks like there's a good chance that we see 3, maybe 4 rate cuts by the end of the year, as people are really starting to get a little bit concerned about the rising unemployment rate. Just because I mentioned it, you can see here is unemployment rate rising pretty steadily from here. And again, many people are arguing, and this is the great debate right now in markets, whether or not the Fed has acted too slow and may have missed the curve, meaning the unemployment rate rise has already started and will likely continue even if the Fed starts to cut rates because they cut too late. That's what some people are worried about. And if you're a bull on gold, that story plays very nicely into your hands because now you're looking at, well, they're going to cut 50 basis points or maybe even more. That story favors gold longs for certain. If you are talking about more of a scenario where you get 25, then gold's going to be struggling at those all-time highs. But we'll have to see. But for the gold traders, that's what you have to think about, or for the dollar index traders. And for stock traders, I think that the market really doesn't care if we see 50 or 25 basis points. It's more where the economy is at and what the Fed says in tandem with that. Let me give you a quick example. If the Fed cuts interest rates by 50 basis points in September, some people would argue, hey, that's really not good because that means the Fed is worried that they're behind the curve, and a 50 basis point cut would make the market actually go down because now people are going to be afraid of recession. I think what's important there is how they deliver a 50 or a 25 basis point cut. If they come in and they say, we're going to start strong and give it some time, and we think we've got this thing beaten and we're going to be a little bit more forward looking, the market would rally hard on 50 basis points of rate cuts. But if they come out and they say, surprise, we're cutting 50 basis points, we're going to try and catch up, the market's going to be terrified, right? There's very different antics there. If they say we're going to start heavy, but we plan on pausing from here for a little bit, the market could say, okay, that's fine. But if we get 25 basis points, people are going to say, okay, the Fed thinks we're in time for these rate cuts and things are just fine. That's also going to be positive. The negative would be if they say 25 basis points and we don't see it appropriate to cut for a little while, then that's not enough for the market to really get excited about rate cuts, I think. So it very much depends. We have Jackson Hole, which is a kind of yearly event that is occurring soon with the Fed in August, I believe, late August. So, these are events where people will be very much wondering what the Fed is going to do. I think likely they're going to signal that they're going to rate cut. They're going to confirm that that's happening in September. But then the question of how much they rate cut is going to be what everyone is after trying to figure out. So we'll see. NASDAQ up about 0.8% at the time of recording this video. I really like this, and I discussed the NASDAQ strategy on a price action basis in today's live stream with Chris Pulver, who joined us. I've got 2 clips for you to roll at the end of the video. Stick around for this from the show. Clip number 1 is going to be my technical breakdown on the NASDAQ that I did on stream. And clip number 2, which will follow that, is the conversation about if we enter into a bear market. Chris Pulver and I laid out some ideas on how one might trade that. So stick around and check this out. We take a look at the NASDAQ. If you're looking at the NASDAQ and you're saying, are we bottoming out here? We've had some moving averages get nailed and responded to very well, right? The 200-day moving average, the NASDAQ could come back and retest that area. But I really would like to see the NASDAQ continue to hold the 200-day moving average. I'd like to see, higher lows, higher highs. I want to see a healthy response to last week. What I don't want to see as a bull would be a big flush down week that just erases the gains, because then likely we will go back and retest the lows. What signals would tell me that we're probably going to go retest the lows? What would tell me that is that if you started to see the big positive day get erased. So this was Thursday, right? Thursday, you had a very strong pop in the stock market across the board. If you get, let's zoom in on this for just a second. So I'm just going to go price action. So the S&P 500, the NASDAQ bottomed out. It was down 6% last Monday. Then we popped back up, tried to go lower again, and buyers came in aggressively and bought this dip. So buyers really stood their ground for the first time here and for the second time here, right? Buyers really, although it's kind of granular, this was the higher low, right? That higher low was big. In fact, if we take out that level, then that's going to be not good, right? So for me, the signal, and probably the point where I need to get out of some of my positions on the long side, would be if we take out the line in the sand day that was Thursday of last week.
So if we cut 3 times in 4 months and we get to, let's say it's a 50 basis points in September and then a 25 and a 25.
Yep.
I mean, we're cutting 1% and all of next year is going to be roughly 1%. So we do it very aggressively up front. I just wonder if the market is thinking that the Fed's cutting for now recession worries, or if the Fed's still cutting with the transparency of, because it's, inflation is under control, we can be less restrictive. But this is why I think the employment data is now taking the upper hand as far as what the market's going to be paying the most attention to. So this week's inflation, it's Tuesday, Wednesday. Personally, man, I think that Wednesday's CPI, I know we have Tuesday PPI, but I think Wednesday's CPI forecast at 3% is almost high on purpose, because what I'm seeing from the Fed websites is like 2.7, 2.74. I just got filled on my daily. All right, perfect. That was easy profit.
So interesting concept on this, Chris, is the CPI report. Here's my thought on it. If it comes in low or in line, I think it will just be okay, whatever. I think that the tricky part about CPI for me, and this is coming from somebody who is bullish, I think that it has a way more downside risk than it has upside potential, because the CPI, if it comes in hot, you've just introduced a double whammy concern to the market. Now slowing data plus inflation. The market needs to see inflation data coming down soft and easy from here, because now we've introduced a new, it's like when you're watching like Spider-Man 1 and Spider-Man 2 shows up, like it's in the second movie, you got a new villain. You don't want the first movie's villain popping in there too, right? We got a new villain, which is
only in the multiverse.
Yeah, right. Exactly. So my thought process on this is, I was discussing this at the beginning of the show. This concept of rising unemployment rate is now, as you just mentioned, it's taking precedence even over the inflation story, and that's even administered in the Fed's speeches that Powell has been mentioning. We see equal risk now to both sides of our mandate, so on and so forth. The other thing that people often like to mention is that, and I know you and I have talked about this, unemployment rate, when it's rising or falling, it usually doesn't move sideways. Usually it's moving one way or the other. It's usually moving up slowly or down slowly. And in bad situations, it's moving up quickly. So do you think, and this is obviously an economics kind of difficult question, but do you think that the Fed is behind the curve on this? As some, the more bearish crowd would say they're behind the curve, the more bullish would say, no, they've got plenty of ammunition. They can thread the needle. What do you think?
Well, I would personally never give the Fed credit for threading the needle, because usually when they come in, it's something's broken, right?
Yeah.
So I think what the market is interpreting is, if the Fed is cutting rates in September, is it because it's now appropriate to cut rates and they're doing what they said they were going to do all along?
Yeah.
Or is it because, oh my gosh, we are in a recession, things are getting way worse? I mean, it's such a delicate situation of what's, like, the Fed. I do think the Fed is backed into a corner. But what again, we talked about this a lot last week, especially when everyone's shouting for emergency cuts. I'm glad they didn't do that, right? You and I both agree.
Yes.
Like, if they start doing emergency
that would have been
slashes,
terrifying.
and so to that point, I also don't want to see this 50 basis points cut. I don't think they need to do that. I think they just need to do what they say, which is 25 basis points, and just do it for the right reasons. Now, I don't know how much time we have in between. Now that we had non-farm payroll, we have unemployment claims every Thursday. We're getting through CPI, PPI this week. The rest of the month, if we can kind of survive
Walmart
with, like,
earnings.
Right, it's gonna be earnings, but they're quiet. Like, Mag 7's done. Last week was 1,000+ companies. They're done. This week's only like 300 some companies. And it's mostly China. Like, a lot of earnings this week, it's Alibaba, it's JD, it's Tencent Holdings. So it's more China than it is. I mean, obviously the big ones are China, in my opinion.
Yeah.
But going into August, the remainder of the month is like Jackson Hole. That's really all that's left. So I think this is going to be a bit of a grind moving forward. Levels that we're both watching very carefully would be, if we come back and test this area right in the middle. Let's just say that the market finds equilibrium, right?
Mhm.
This is now, I'm very short term, and I'll honestly, like, I'm very short term. I think that the bulls, I mean, even this morning, it's like we dropped 35, 40 points this morning, ripped all the way back up. And I was like, okay, that's cool. It's a Monday, so that's nice that the market's not just dumping. I looked at currency strength this morning. The JPY, the Swiss, started off very weak all morning. Started to rip back up here right at opening bells. Like, okay,
Yep, yep.
like I just think that what you have to watch is you have to watch for risk on versus risk off flows.
If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.